I'm going to show you exactly how to give a ridiculous lowball offer and not look like a jackass. And this deal here is 9 single family homes that they are asking $1.145 million. And I got it under contract for $830,000. I'm going to walk you through the whole process, exactly how I explained to them where my offer was coming from. So it made sense. And ultimately it got me what I was wanting. And I think it got them what they were wanting as well. Now, if you guys don't know, my name's Ross. I've been investing in real estate for 15 years. I'm also a general contractor. I've flipped over 300 houses, own 150 rental units that bring me around $2 million in rental revenue every year. So let's get into this deal. So like I said, it's 9 single family homes, and I'm going to show you exactly how I ran through this with them. Actually, with a computer is how I did it. It was on a video call, so I could show them exactly where I was getting the numbers. So here we go. Here are the 9 houses. And I started by showing them what their proposal was. All right. So they were asking for $1.145 million. And here are the current rents. All right. So we all knew that these things were under rented. All right. And so the first thing I did is I told them that, hey, listen, I really respect meeting you guys. This is all true stuff too, guys. What I always try to teach you is that selling is not the bad kind of selling that you've been taught. Selling is really just getting to know somebody, building a relationship, and then having real conversations with them. And once you have expertise and experience, you're comfortable having real conversations with people. So, guys, I really respected you, really was really happy to get to know you and really loved what you've done with the properties. But my offer is not what you are expecting. And I just want you to know that up front. And I'm going to show you exactly how I got there because, like I said, I respect you and I wanted to take the time to explain how I got there. So your offer was this, and here are the rents. And I just got to show you how any investor is going to break this down. And nobody is buying those houses except for investors because, they're little houses, they're beat up, they need a little bit of work. You guys have done a great job managing them, but there are some underlying issues with them that are going to have to be addressed. Can we agree on that? And yes, they could agree on that after we have done the walkthroughs and such. And, while we were doing the walkthroughs, we were talking about some of the things that I would need to do if I were to take over those properties. So they knew in advance that there were issues. Now, I showed them my cash flow calculator. So I say, listen, if I buy these houses for $1.45 million and they're bringing in the rent of $82.50. Okay. And now I want to break down everything before we get to how I got that number. All right. So obviously, we're going to say that I get a loan to buy all of that. We can talk about all that, but this helps build authority as well. 6.5% interest. So as you guys know, interest rates have gone up over the last few years. I have really stellar credit and I have a really stellar track record of buying investment properties. So generally a lender is going to give me around 6.5% interest, which is not going to be the case for maybe somebody else who's going to come buy these. All right. Amortization, 30 years. The taxes on 9 properties in the area is going to be around $9,000. Can we agree upon that? Yes. Okay. And then the insurance is going to be around, let's say, $1,200 per property, which is probably low. Okay. But that would be 10.8. Right. Yeah. Yes, it would. Okay. Now, this is important, guys. I have to figure for vacancy. All right. Also, opportunity for me to build more authority here. See, we have a property management company where we manage over 1,000 doors. So this is not just based on a couple rentals that I think it's going to work out this way. I know over a large data set that it works out exactly like this. So 7% vacancy is what I have to figure on. I have to figure that those things are going to be vacant and I'm not going to be collecting any money. I have to figure on 8% vacancy and 8% capital expenditures. I also get a discount here because it's my company, of course, but I got to pay these people who go out and do these things. This is 8% that I have to pay property management. That's what I figure for. Now, let me just tell you guys, we're still in role play here. you self-manage, all right? So you don't have those expenses. But anybody who is smart, who's going to come in and underwrite this deal, figure out what they can pay for it, is going to be paying a property manager, and they are going to figure that in, okay? And if they're not smart, and then you probably can't count on them to actually close on a deal like this. And that is one of the advantages, always building the value proposition, right, guys? Because your strength of offer is always equal to your value prop times your authority. Okay, so you've seen that I've been building authority throughout this whole thing. And authority comes down to three things. All right, one is rapport. All right, so I've spent a long time building a good rapport with them. That's how well they vibe with me, so to speak. How well you get along, because when you have a good relationship, you start to bring down that sales allergy, the sales friction that everybody seems to have. That's also why you hear me say things like, I really love these properties. I'm excited to have these properties, because what bad salespeople do is they're in there saying, oh, this is crap. We're going to have to get a big discount on there. I am very respectful to the time and energy and effort that people have put in these properties. And it's not a game. I'm being serious. I know what it takes to manage properties like this, so I have respect for anybody in the game. Okay, so rapport. And then you have trust. That's how much they believe that I'm going to do what I say. And that's, rapport's cousin, but it's a little bit different. Okay, you can vibe with somebody but not trust them. And you can trust people and not vibe with them. Just think about, never mind. Just going to stop on that. Last one is expertise. Okay, that's expertise. While trust is believing that you are going to attempt to do what you say, expertise is them believing that you can actually pull off what you say. All right, so my whole tour with them was me building authority mainly through expertise, which I'm able to do at this point in my career. If you're newer, you might not be able to build the expertise as much. But anyway, back to this. All right. So I've explained that if somebody is not figuring this in, they're probably not a true investor, and they're probably not going to be able to offer what I'm offering, which is the sure deal. Okay. And also, these folks are trying to buy with a 1031. All right, so this was another way that I was able to build in value, okay? And I'm going to get to that, okay? I'm going to take note so I can come back to the 1031 explanation. All right, so I'm in this conversation with them. I explained to them where I come with these numbers, and I got to say, look, guys, at your numbers, you are asking me to take on this property or this portfolio of properties while losing $31.95 a month. And you cannot say that any of this was not reasonable, right? Let's go through the numbers here, how I came to this. Is any of that unreasonable? No, it's not. I know, because you guys know what it's like to invest. All right, so I've been reasonable about how I've come up with the numbers. So how do you expect me to buy a portfolio like that? And who do you think is going to come buy this? Okay, and this is the opportunity for me to explain that we also own a real estate brokerage where we buy and sell properties. So we see a lot of stuff out there. And I have properties just like this, which I showed them the properties that they're getting offers for less than I'm about to give you. Okay. And so I know what it's like out there, and I obviously can't overpay for these properties. All right. So that is what you have offered me. Now, we both know that these rents are actually undervalued because you like your tenants so much, which is awesome. Okay. I think that's great. But I want to be reasonable to you when I'm making this offer. So I'm going to say that I can move the rents up to, on the 2 bedrooms, probably $10.50. I can probably move the 3 bedrooms up to $11.50, and so on and so forth. All right. So let's run the numbers again. Let's say at the target instead of what you're at right now. Still, guys, same numbers. I'm still losing $19.18 per month. That would be not smart for any investor to do. And so, again, I just want you to know that I'm not trying to burn any bridges, because even if we don't make a deal today, we may make one tomorrow after you go out into the market and learn the things that I'm saying. Now, I do want to remind you, okay, so for you guys learning how to make a sale, all right, I'm building up all the value I can before I actually show them my numbers, right? Which would be the smart thing to do, because once they hear those numbers, they're going to stop listening to me. Okay, and so you know that if you go out on the market and you go sell this house for instance, let's just say that house number 1, you can actually put on the market for 115. Okay, but you're paying real estate commissions. All right, that's 6%, maybe 5% if you get a deal. You're going to pay closing costs. Not only that, but I know, because what I teach and what I do is you get a house under contract and then you go get an inspection done. And, like, you need to be reasonable about this. Like, if I could see things were wrong, I want to include that in my initial offer. But I'm not going to look very hard. And then that inspector is going to come back, and it's going to be in my best interest to find the most nosy, detail-oriented inspector possible. And they're going to bring me a big list of all the crap that's wrong with those properties. And I'm going to say, oh, okay, well, I can't pay the 115. Then I'm going to have to pay 100 or 90 or, 75, because here are all the things that are wrong. And here's the market price to fix all those things. Okay. That's how people buy on the market, especially properties like this. So I just want to remind you that the offer that I give you is the offer that already has the inspection built in. I've already looked at all those things. I'm not coming back. This is the offer that I stand by, and that is so much value. You'll see some of these houses fall in and out of contract 2 or 3 times before you ever get it sold, and it'll be far less than the price that you want, and they know that. Okay, so that is how I came to my offer, and here it is. I'm going to go property by property. And I got to tell you guys, when I did this, I did not show the total. Okay. I went property by property. So we were hiding this. Yeah. Okay. Just so, it's not a trick. It's because, think about it for yourself. Once you see that number, you stop listening to everything else. All right. So property number 1, 90, blah, 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 blah. And then this one here, I really don't want, but I would give you 60 for it. Okay. So that's how I come to my offer price of 830. And I just want to show you, this is not crazy. You think that I'm getting a steal here, but let's just look. 830. Okay. Based on the numbers, 8250. Look, guys, I'm still buying this, knowing that I'm going to lose money at first. And I'm going to go do the work of an investor, and I'm going to go in and I'm going to improve the properties, which, by the way, not even including this in here, that I have to do $10,000 to $15,000 of work, maybe $20,000 on each one of these properties. I might get it done a little bit cheaper because of the skills that I have and the networks that I have. But still, $10,000 to $15,000 on each one of these properties that are going to come out of my pocket that are not included in this figuring. Okay. It's going to take me probably a year before I turn over all of those places and get the rents to where they need to be. And I'm doing that knowing that I'm going to be losing money the first year. Now, after all the turnovers are done, look at that. $73 a month. Guys, not putting kids through college on that. All right. I'm taking a risky bet here, and I bet that nobody else is going to do that. Now, I want to go through here, guys. All right. This is still talking to them. That price might be a little bit lower than you had expected. Okay. But there's more to it. You are wanting to sell those properties because they're C-class properties that require a lot of maintenance. They require a lot of phone calls. They require a lot of headaches. And I know that is a young man's game. And I'm in the game, all right? I have the resources and stuff. I could not imagine self-managing those and trying to raise my family, have a family life and all that kind of stuff. And so, once again, mad respect. But what you need to do is you need to upgrade. So that's what they're trying to do, is they want to upgrade to like B-class, maybe even A-class properties. So I'm saying out of these 9 houses, they can probably go buy 3, maybe even 4 B or A class properties in a 1031 exchange. All right. But here's how a 1031 exchange works. Okay. You basically you don't quote me on these numbers. All right. I've only done a couple in my life because it's not really my main strategy. My main strategy is buy and then hold till I die. But anyway, the 1031 it's a section of the tax code. It's section 1031, surprisingly enough. And it is a like-kind exchange. So I can take this house that I sell for $100,000 and I could take that money, and instead of having to pay taxes on the gains of that, so long-term capital gains, you're going to have to pay like 20% of the profits. So if I were to, here we go, let's get into this. $100,000 is what I sell the house for, but I bought it and renovated it. And, so I already had $80,000 into it. So my profit on that was $20,000. I would pay 20% long-term capital gains. If it's short-term, i.e. you've owned it for less than a year, like you're flipping it, you're going to pay a lot higher tax rates than that. But on a long-term, you're going to pay 20%. That's, oh my gosh, look at that. It does the math for me. Does it? No? Okay, so that's $4,000. I'm going to have to pay $4,000 worth of taxes on that. But if I do a 1031 exchange, I go and buy a like-kind property, which means it is of equal or greater value. So I could go buy a different house that was $100,000, or what I could do is I could take 3 houses that sell. Actually, let me go back. I could take that house. I could buy one for, let's just say, $105,000. I would have to bring the $5,000 difference, but I would pay no taxes on that. So now I've upgraded the asset, and didn't have to pay this $4,000. That's cool, right? But what's even cooler is, and by the way, their profits are going to be way bigger than that because they bought these like 10 years ago or 15 years ago, and they probably have like 30 grand in each one of these. Didn't mean to do that. They have 30 grand in each one of these. And so really it's like 70,000. So they're really going to be paying like $14,000 of tax on each one. Okay. So they would save that. That's huge for them. Okay. But what you can also do, let me tell you one more thing. The thing is, there's rules on the dates here. So when this first one sells, you actually have to have the money. You leave it with a 1031 intermediary. So there's like qualified intermediaries that hold the cash, the $100,000, until you have identified and closed on another property. And there are timelines on identifying and closing on that other property. I think it's 45 days you have to identify and then 90 to close on it. I could be wrong about those numbers. You'll have to look them up. But the point is, there's a shot clock that gets turned on as soon as you close on your first house and are trying to buy the next one. All right. So what ends up happening to a lot of people is they think they have time. All of a sudden they run out of time. So then they end up buying a crappy deal just so they don't lose the tax benefit. See what I'm saying? All right. Now that you understand that, you can understand the real value that I'm offering these people. By the way, I'm explaining all this to them as well. They kind of know, but all right. But instead of taking $100,000 and buying, a more expensive property, what they could do is they could take $100,000 times 3 houses. Then they have $300,000. Okay. And they can go buy with that $300,000, one property that is A or B class property. Okay. That's going to bring more rent and way less headaches for them. But the problem is that if they went and sold each one of these properties on the open market, they would have to strategically and perfectly sell them all and align the purchase of the new property. And there's just no way that they would have the time to go find what they want. So what I'm offering to them is flexibility in the closing timelines. They can go find the properties they want. So we would be under contract for all 9 of the houses. And they would go out shopping for the house that they want, negotiate the kinds of deals they want. And then as soon as they have what they want, I'll say, oh, okay, I'll close on these 3, the perfect 3, to make sure they have the money they need in the like kind exchange. And that means that they're probably going to get, $20,000 to $30,000 better deals on the front end, and they're going to get the exact houses and the exact locations that they want by having the flexibility on the front end. And that is extremely valuable to them. Okay, so you see what I did throughout this whole offering situation is I built up as much value as I could before I made the offer, and then I made the offer. And I showed it. I showed exactly how I arrived at the numbers. It wasn't random. I was building authority through the whole thing. And then, my final pitch on the flexibility, the 1031 closing. And ultimately, that's how you give a low ball without seeming like a jerk. Okay, so I show people exactly why I'm offering what I'm offering. And I do the same thing on single homes. I generally will use the flip calculator here. So I went on another appointment the other day, and I went through exactly the types of stuff I was going to have to do on the house. I explained each one. And each time I'm like, okay, so do you agree with this? Do you agree that I need to put in new kitchen appliances? And do you agree that they're going to cost me $3,500? All right. So yes. And this is not like the yes ladder kind of bullcrap selling. It's just that I want you to understand why, because I know that you see this number and it's really low to you, but I want you to understand why I got there. Okay. So here we go. It's $54,670 for the scope of work. That's how much it's going to cost me to repair it. By the way, this is a different deal than the 9 houses. I'm talking about a one-off house that I offered on yesterday as well. And then I go to the flipping calculator, which this already preloads for me. Okay, do we agree, Mr. James, that houses in this neighborhood that are fixed up sell for around $300,000? This is actually the case in this neighborhood. Okay. So like I was showing him on Zillow, like this one sold for $293. This one sold for $305. Is it fair to say that I could probably sell this one for $300,000? Yes. Yes, it is. Okay. That's rational. Okay. And then I show them, well, hey, listen, man, I don't do this crap for free. Obviously, I need to make 15% on the money that I put into this deal. Okay. I have to get the money to do this deal. I have to hold this thing for 6 months. That's how long it's going to take to do $54,000 of renovations, put the house back on the market, wait for a buyer, wait for it to close. All the while, I'm going to be paying interest on that money. I'm going to have other costs to close. 2% is usually what I figure. Honestly, it costs me more usually. That's closing costs on the front end. None of this crap that you have to pay. And then I have costs for the sale. Got to pay real estate agents. Got to pay closing costs on the back end. Usually costs me around 7%. Honestly, it usually costs me more than that, but I'm trying to be as reasonable as possible. And all that brings me to an acquisition price, an offer price of $159,419. Okay. That seems like an extreme low ball, right? Okay. If you just went in there, they're thinking their house is going to sell for $300,000 and you come in and offer half of that, they're going to be like, dude, no, not a chance. But if you show them how you got there, it's like, oh yeah, that does make a lot of sense, man. And gosh, you knowing all that builds a lot of authority, makes me like you more. That's part of the offer strength formula. If you like this stuff, guys, I got a free school community where you can ask me any question. I get on there and answer every day, every question, except for on Sundays like Chick-fil-A. And yeah, we'll hop in there. The link's in the description. And also check this video out right here. Talk to you guys soon.